Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors, and welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan, and I'm so delighted that you're back with us again today. And I know you are really going to appreciate what we have to share with you today. We're going to be taking a look at investing in the world of small bay flex industrial real estate. We have an expert with us today. Cody Payne is the Senior Vice President of Colliers International. And he is a distinguished figure in the commercial real estate realm, specializing in office and industrial properties within the Dallas-Fort Worth market. And he has an impressive track record spanning over 12 years. Cody has facilitated the closure of more than 500 commercial real estate transactions. His tenure at Colliers International has been marked by unparalleled success, leveraging the firm's robust platform alongside his profound expertise in leasing, management, and market dynamics. Cody offers investors a unique proposition, and that is the ability to optimize value while securing a competitive edge that translates into superior outcomes. So, Cody, welcome back to the show. And this is a second time that Cody has been with us. About 3 years ago, he was with us on our previous podcast, Creekside Chats with Successful Real Estate Investors. Welcome, Cody. I'm so glad you're back with us and anxious to get into the topic here today. But tell us a little bit about Cody and how you got into real estate brokerage.
Absolutely. Thank you, Doctor. And I appreciate you having me back on. Appreciate you reading the bio. It sounded good. But no, I've actually been doing real estate for about 19 years now. And, I've got a good team that's been with me for a long time. We sell flex industrial investments all across Texas. We've done some work in some other states. And so, with the boom of it, it's really expanded our business exponentially since, 2018. I got into real estate back in 2005. I was actually selling cars before that at Westway Ford. Growing up, I always wanted to be a salesman. So car sales was a pretty easy swing to get into. And I did that while I got my real estate license, and then transitioned in, did a lot of leasing management, stuff like that, then got into investment sales. And now we kind of do a full spectrum, and have built a very, very good team, very impressive guys that impress me every day. I love being around them, very multi-talented team. And so, our goal that we kind of do every day is just continue to bring more eyes to this asset class. More buyers, more cross-asset buyers, which, you and I were kind of talking about earlier. We've had a lot more people coming from other asset classes to this asset class over the past few years than I've ever seen in my entire career. And so very excited about that. Very excited.
Well, that is interesting, Cody. I think you're one of the first people I've ever heard say that as a child, their aspiration was to grow up to be a salesman.
My grandpa was pretty savvy. He was a pretty savvy, little salesman, and he was always making little deals with people in the neighborhood and whatnot. And I always thought that was pretty cool.
Yeah, well, it's always nice to have a mentor, particularly a granddad who is a good mentor. So, yeah. Well, let's get into the small bay flex spaces, and particularly what makes it so popular these days.
Well, I'd probably say the biggest thing, it really started catching popularity, like I said, in 2018, when the model started changing a little bit more. Because back in the day, when I first got started, it was really kind of a grungy asset class. A lot of people didn't like it. Institutions wouldn't touch it, but as the economy, commerce, and all those things have just continued to change and kind of work into its favor. And it started to become more of a flexible model to where it can tailor to many different type of tenants. It started to gain a lot of popularity. But then what really gave it its biggest boost was COVID and inflation. And the reason for that is, I mean, as inflation has impacted a lot of people's bottom dollars, through multifamily, especially in the office sector, right? Office buildings are some of the most expensive to operate, retail. And, you take all these and, these people that own it, they've been looking at, all right, what's an alternative investment that can fight against inflation? And small bay flex industrial is a great investment because it doesn't have as much expense on the turnover when a tenant leaves. The tenant retention is very good on it. The tenant pool and releasing is very good. Your cost to release. A lot of those things are very good inflation fighters that some of the other asset classes they literally can't run away from. In office space, kind of like here, once it's used for so many years, once that tenant goes, I mean, it has to be redone. It just, a lot of those just can't be released. And so that's the benefit in the small bay side is it's a lot friendlier on the releasing.
Well, I'm not sure all of us really know exactly what a small bay flex industrial site is. So explain to us what that is.
So, what I would probably say a small bay industrial park, is kind of what you'll see. And there's several different models of these, but, there'll be a park that holds, a lot of smaller tenants ranging anywhere from, I mean, these guys can be as low as 800 square feet up to, 10,000 square feet up to, maybe 15. Once you start going larger than that, you start getting into mid-size and whatnot. But, a lot of these are parks that you'll see that have, your general contractor tenants in there. Your service oriented style tenants in there. They can be really diverse to where they can, hold maybe some retail, maybe some showroom. A lot of these will have a lot of subcontractors, local, regional, even satellite offices, but they're very good and they're flexible warehouses to where a lot of times you can go in and, if you need 1,500 square feet, they got it. If you need 3,000 square feet, they got it. And so they're a very diverse style asset that really tailors to a lot of times the contractors and subcontractor style tenants, and that's why they do so well, especially across Texas and in other states that have really good housing booms, because a lot of these guys can help service those neighborhoods and those needs for construction.
So basically, it's a warehouse that is broken down into smaller chunks. Is that what we're really looking at there?
That would be the easy terminology of it, yes. Because you got to
And
keep in mind with industrial, you've got your big box, right? Your 150, 250, 1,000 square feet where a lot of the institutional guys play. And then you kind of go down to the mid-size levels, and then you go to the small bay, which, the small bay is the most active tenant pool, especially when you're around 1,800 square feet, which is kind of the average size that a lot of people are building at now, because that's your largest tenant pool. So your tenant turnover is much easier to re-tenant than if you say have 50,000 square feet.
and these sites are they existing sites that you're converting, or are you primarily developing new spaces?
So, our main forte is the investment sale of these parks. And, we do a lot of new construction. We help people build new parks. We even build new parks. We work with several funds that buy land and build these parks, a lot of private guys. And so, the new build is on the rise right now just because there's such a need for it. There is still a lot of that we sell that people go in, they buy, they renovate, they increase, rental rates, convert to triple net leases, and then resell or package up and sell off in a portfolio. And so there's many different aspects of it. And it's very similar to multifamily, right? You can build new, or you can buy existing, fix up and flip, or fix up and hold. And so it's actually a very similar concept.
And so the places that they're building these, if you're building retail, you're going to have to be in probably the more congested area you're in, the better it is for that. I'm thinking with these kinds of sites, you could be further and further out on the outskirts and still probably do fairly well. Is that a good assumption? Or
Yeah, you absolutely can. I mean, there's parks that are, off the beaten path on roads that have virtually, no traffic counts that do very, very well. But obviously, like any asset, the better location, the better that a lot of those things will do. I think location is always key on anything you do, especially if you're building, because one thing that I tell people is if you're building these, you don't want to be too far out in the outskirts where there's too much land, because it's similar to self-storage and even similar to multifamily, that if there's a bunch of land available around it and you start building one, sure enough, someone's going to come and start building one next to you. So you always got to kind of be aware of that and understand what the competition can come in and look like. But no, I mean, it's, that's the best thing about the asset class is, we sell stuff in towns in Texas and Oklahoma and these other areas that nobody's ever heard of that are performing very, very well.
So it isn't really critical to be in a like most multifamily properties, we're looking at populations of 250,000 or more. And you're saying that even in tertiary and smaller communities, that you can do well in this arena.
Absolutely. It runs off of similar metrics to multifamily and similar metrics to self-storage, which, out of all asset classes, storage multifamily kind of like, not all of them, but like a lot of the same demographics, right? They like to see, certain type of growth and things of that nature. This one's very similar, except it doesn't run on as much population as maybe those do. It does run off a lot of growth, a lot of, there's a lot of different statistics and demographics that we look at anytime we're looking at a site. But it's not as dependent on some of those key factors as, multifamily or retail are.
So we are talking today with Cody Payne, and you can find Cody at flexbusinessparks.com. And Cody's email is cody-payne@colliers.com. And Cody is an expert in small flex industrial sites, and he's filling us in on the ins and outs of that today. So, Cody, how has flex changed over the last few years?
Well, it's, with the pricing of a lot of stuff being stagnant or even kind of falling backwards, flex has continued to push the limits as far as pricing and even cap rates. I mean, we're still achieving record pricing in many markets, still breaking cap rate records in quite a few markets. And, the biggest thing is because it's not a new asset class, but it is a newer evolved asset class to where, back in the day, it was mostly just straight general warehouse, like we were talking earlier, kind of grungy and whatnot. And now, you can have a very diverse group of tenants come in here and utilize the space. I mean, they can use it from office space to retail to showroom to, general workspace, garages. And I mean, as you've probably seen, I mean, there's even parks that are built as condos and, sold as, luxury garages for people that have, nice cars and stuff like that, which they do a bunch of those out here as well. But I think the evolution of it has helped out quite a bit over the years, and the type of tenants and the type, as many, the small business aspect has just grown exponentially over the past, 6-7 years. And I mean, and this, I mean, how many people do you know that have, are running a small business now that, back in the day, a lot of people worked for larger companies, and now it seems like everybody's got, I got a family member that's got like 5 businesses, and, they run them all out of a little flex unit. And so it's just evolved with the, economy and how business is done. And it's, I think, one of the better asset classes that tailor to that.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, in terms of, you say it can be retail, showroom, storage, garage, so on and so forth. Are these all generally mixed into one particular site? And are there zoning regulations that prevent one particular kind of class from being in a site, or how does all that work?
So to answer your first question, are they all on one side? I mean, we've seen people make a site that, kind of tailors well to a lot of these, where they'll maybe do a showroom retail on the frontage road that has good frontage. And then in the back part, they'll do more just straight warehouses that just subcontractors do. We're actually working on a project right now in Weatherford that'll have that. It'll have a nice frontage, but then the back part is made for subcontractors. It'll have fenced inside yards and things of that nature. And so, yes, you can do that. And then to follow up on your second question, what was that? You hit me with two questions. I'm only good at one at a time.
Sorry about that.
That's all good.
Zoning and
Zoning.
Yes. Regulations. How does that come into play?
So like anything, if you're building in the city, you're going to have zoning restrictions and requirements, right? A lot of cities are going to make you sometimes put a certain facade on the front, right? A lot of people are trying to build these out of metal construction right now just because of concrete cost and doing tilt walls, very expensive. And so what a lot of people do in the cities is they got to do some type of facade and things of that nature. But I will tell you, there's a lot that people are doing and looking for that county land, that land in the ETJ, to where there's a lot less restrictions. And even a park that we're doing right now is, we were very keen on doing it in a specific area, but we had to do it in land that was in the county to avoid those certain city restrictions. Because, I will tell you, a lot of them have started to come around to it. But for the longest time, cities did not want these little metal buildings out there. And I get it. Some of them aren't always the best looking. But that's the only thing that we really see whenever you're running across city is if the zoning allows for it, they'll a lot of times make you make the front or anything that faces the road look a little bit better, which, they're very big on doing that with self-storage as well. Is anything that anybody can see, they try to make it look as nice as possible. And then, back behind it, they sometimes will relax. And then, you've got certain fire code issues and building size requirements and sprinkler requirements in the city too. So there are a lot more things you got to look at when building in the city. And I think that's why you have so many people doing it in the county right now. But it's popular all over.
Well, this is interesting. I have a sister who lives in Princeton, Texas.
Oh, nice.
And I was just talking to her just this past week, and she was telling me how, they've lived there for about 20 years or so in this particular location. And she was telling me how drastic the growth has been there in the Princeton area over just the last 10 years, where they had a pretty quiet, private place, and now they're surrounded by industrial and business entities on all sides of them. And apparently Princeton didn't do a great deal of planning because they haven't improved the roads and the streets. And they have all of these huge apartment complexes going in. And so the traffic is just horrendous out there. But from what you're telling me, it sounds to me like they actually should either build their own small flex industrial site or just sell it off and get out of there.
Well, I'll tell you, Princeton is actually a very good area for small bay industrial. We've got several developers that are trying to do stuff out there. We're trying to do stuff out there. But yeah, you do have, because you got areas like Princeton, right, that are outside of the Dallas-Fort Worth Metroplex, that a lot of that is county land until it gets annexed. And as the growth goes out there, it can sometimes take a while. And it's, and not like, some cities like Houston and others that don't have as, much zoning restrictions just to build infill. But yeah, you'll run into that quite a bit out there is, people will take advantage of unannexed land and build, where they can. And, Princeton is a very good high growth market for not just for multifamily, but for small bay industrial. But yeah, you'll run across a lot of that in towns that are just outside of infill areas, right? Just like Houston's kind of the same. You got Houston, and then you've got, the Woodlands and Katy and Tomball. Austin's the same way. A lot of people are building it in Georgetown and Manor and stuff like that. And you've got the same thing going on in, Colorado and a lot of other areas is, people try to put these as close to the big city as possible while staying in the county.
So that they can avoid a lot of the regulations there.
Well, you save a lot of building costs on avoiding those too. A sprinkler, to install a sprinkler system in a building right now is, running you $8 to $10 per square foot.
Yeah. Wow.
Yeah.
Big difference there. And then it's not just the building as well. When you get into the city, you've got setbacks, you've got you've got to have certain kinds of roadways that that have to meet certain different codes. It's a whole different
Oh yeah,
experience
fire
building a
lanes,
city.
turnarounds, all sorts of stuff. Yeah, retention ponds. It racks up quite a bit. So that's why we tell anybody that's wanting to do it and they're new, we say either get a really good civil engineer or do it in the county.
Yeah.
That way you
For
don't run
sure.
into those hurdles.
Yeah, for sure. Well, we are talking with Cody Payne, and you can find him at flexbusinessparks.com. And Cody, how does your team help new developers?
Well, we help them actually in many ways, and I'll have to send you a copy. We actually wrote a book on the flex space called Flex Space Domination. I'll send you a copy,
Oh, great.
and it basically outlines what we do to help people, and as far as all right, you want to start? Here we go. We got to find us a piece of land. We do our demographic search. We figure out all the parameters, make sure it meets it, and then you start going from there. Then you check in with the city, and so we help people as far as we'll help them find land to build a park, and we offer services to walk them through on doing that. If somebody wants to buy an existing park, obviously that's our main forte, is selling investment flex industrial parks, and so we can do really any of those. We've got great contacts that are from civil engineering to metal builders to contractors that can help get these things done. And so, our team is very good and has been doing it for a long enough time that we can help people understand the asset class enough to be dangerous.
Well, wonderful. So we've talked about where this class is at for today, but where do you see that going in the next 5-10 years?
I think that is the key question that, and let me tell you this is kind of my thought on it. So you remember self-storage, right? In the late 90s, early 2000s, it was all single mom and pop kind of owners, family, offices, things of that nature. And you look at it today, and it's now one of the heavier institutionalized owned asset classes. And I think that the flex side is on that same trajectory. And one of the reasons why I say that is if you look at the institutional ownership of flex just 5 years ago, and just take Texas, for example, it was around 10%.
Wow.
And today it's now 26%.
Wow.
And so that's a pretty big jump in, just a few years.
Mm-hmm.
And so it's on a similar trajectory. And as you know, anytime institutional money invests in an asset class, those prices tend to rise. And so you see that right now with the office sector, they're kind of leaving that asset class. And that's why those prices are, going down all across the board. And so you got a lot of people that are coming into it. A lot of people understanding it. Is where they sold from cap rates from 5, 6, 7, 8 years ago to where they're selling at today. I mean, it's a very big gap. Price per square foot's literally 7 years ago. I mean, it was probably averaging around 70, 80 a foot, now around 140, 145. And so, I mean, it's a huge jump, and I don't see it going backwards because with all the supply across the US that keeps coming on, it hasn't changed the months on market that much as far as leasing.
Oh, really? Yeah.
And so I don't know if you track that much on the multifamily side, but that's something that I look at anytime someone's looking at building a park in a certain areas. We go, okay, let's look at who's out there and figure out, let's run our searches and make our calls on how long these spaces are taking to lease up. And I mean, you really don't have a huge discrepancy from today as from a year, 2 years ago. And so they're still performing very, very well. Obviously, that's going to be market specific, right? But they're still performing very, very well. So I see a very bright future. And as institutions and larger funds continue to come into this asset class, it's going to make it a very interesting asset class, because our biggest issue that we had, I'd probably say 4 or 5 years ago, is we would go out and talk to these, family offices, these real estate funds and institutions, and say, hey, look at this asset class. This is a great asset class. Y'all should look to invest in it. And didn't get as much from it. And now, I mean, those guys are all about looking into it. And so, and there's quite a few of them that have been building funds to buy it and selling stuff and changing out of asset classes to come over to it. And so I think you've got a lot of people that are going to keep funneling into it because of the type of investment that it is.
Sounds like a great place to be in this day and age. I'll have to share that with my sister. We are talking with Cody Payne, and he can be found at flexbusinessparks.com. Cody, what are your parting words for our audience today?
My parting words, I think I fumbled it the other day. I was trying to tell to somebody, but because they were looking at building some of these parks and they were worried about, what if I don't make it or whatnot, which, we worry about that all the time. I mean, we're 1031, we're independent contractors. And there's a quote, you'll know this probably better than I would, but it was something to do with more people are scared of failure or don't do something because they're scared of failure than actually doing it. It was really good when I read it, and I butchered it every single time, but it was basically just, don't be scared to fail because, you'll always regret not doing it because, and we've all got family members and we've all done, something where we should have, could have, would have, and risk versus reward. But, you always surround yourself with the right people anytime you're going to invest or go into a new venture. And I think if you do that, you should be on the safer side instead of going at it the lone wolf style, because I believe commercial real estate investing and building is a team sport. Nobody does it all on their own. And so make sure you have the right team around you, because I know I do. And so I think as long as you have that, you should be fine.
Excellent advice. That's been my big downfall in real estate, is when I've gone out there and tried to do it all by myself.
Me too.
Without the knowledge to do it.
Absolutely. I invested when the market crashed in 2008. I started buying a bunch of residential homes that were really cheap, and I didn't realize I was doing the management on it myself. I was doing the leasing on it. I mean, I was even doing some of the maintenance on it myself, and thinking I could just do it all on my own. And it was just a disaster. Yeah. But I eventually got right people to help me out. Yeah, it cost you a little bit more money, but the stress and anxiety went away at that point.
Yeah, it is a team sport. And like you said, be sure the team you're with is a good team.
Doctor, I remember the quote. It was fear kills more dreams than failure ever will.
Yeah.
I'm
brilliant quote. Yeah, brilliant quote.
There you go.
Brilliant quote. So thank you, Cody, for sharing that with us. And once again, we have been visiting with Cody Payne. You can find Cody at flexbusinessparks.com. Thank you, Cody, for being with us. And enlightened investors, it's always wonderful to be with you. So thank you for sharing your time with us today. Please take a moment to like, share, and subscribe. And please go to your favorite podcast app and leave us a rating and a review. Until next time, live abundantly in all areas of life, and we'll see you in the next episode. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.